I buy and sell real estate like stocks. I got to a point where I was running, like 25, 30 construction sites. This isn't what we want from life. I don't want to build a big business. It felt like I was a business owner working full time. And I did this to be financially independent. I have 4 strategies, I guess, for building wealth right now. The first is buying private businesses. Second is owning a real estate portfolio that has cash flow and appreciation upside. The third is investing in stocks. And the fourth means of building wealth for me would be private lending, because I'm so frugal with my time now, as opposed to being frugal with my money. It makes sense, I think, to have diversity in your income streams as you build wealth. What will help me live the best life? My passion built me a lot of wealth. And so now that I have all this wealth, I might as well spend some of it and enjoy life a little more.
What is up, YouTube? Matt McKeever here, and in today's, actually before we get into today's video, what do you guys want to bet? Is Mike Rosehart selling all his shit, or is he buying a whole bunch more shit? Because every time he comes on my channel, he's doing one or the other. Well, if you're curious to find out whether Mike's selling all his stuff during 2020 and COVID-19, or whether he's doubling down and trying to buy all of London, Ontario, we're going to discuss it in today's video. Smash that like button, hit the subscribe button if you're new here, and let's dive in to today's video.
Hey guys, Matt McKeever here. Really excited to have Mike Rosehart back on the channel. Hey Mike, how's it going?
Hey, good.
So, I thought it'd be great to have you back on the channel and just kind of give us an update to where you're at in real estate. So a quick reminder for people that maybe aren't familiar with Mike or some of his updates he's done on the channel. In the past, I think probably the first time we had you on the channel, you were aggressively buying. And then later on, you were aggressively selling and you essentially sold everything off. Then you went back and rebought everything. Then you started buying in Florida. Then you started doing this. Then you started buying businesses, that and the other. What's going on in Mike's world right now? It's June 2020. Tell us, where are you at? What's going on?
Life's good, man. Can't complain. I've been preparing for this recession for a long time. I've got a war chest of cash. And you know that I've gone through cycles where, so I'm a believer that any property that has too much equity that I can't pull out and has a bad return on equity or return on time, I'm going to dispose of. So I buy and sell real estate like stocks. And I do focus on long-term capital gain. But if there's an opportunity to sell a property for a profit, a large profit, or something I think it might be a little bit overvalued, I'll take advantage and sell that and buy something else. Of course, I factor in tax implications with that, but I've always liked to, keep a little bit saved. When I'm doing well in, like, say, poker, I'll keep a little bit aside. I'll cash in some of my gains, put a little aside, and then play with the rest. That's been the strategy I've used for the last, 9 years of real estate investing. And so, in 2017, I sold a whole bunch off. I sold 11 properties off. That was a huge, regret, because in some ways, I guess I don't regret it because I took the cash and I invested and did well. But I guess some people would say that should be a huge regret, because obviously I probably left $1 million on the table in appreciation that happened over the last 3 years. But I've always been of the mindset that you should keep your money working for you as hard as it can. And so even when I had a little bit of money minions working for me, I was actively trying to deploy them at all times. Like if I had equity in a property, I'd be working diligently to pull that out and put it to work. So pull it out at a cost of 3%, put it to work at 12 or 15. So where am I at right now? You guys know I grew to we had almost a $20 million real estate portfolio with a lot of joint venture partnerships. I've been winding a lot of that down. It was a lot of headaches, a lot of stress. My main business partner that was helping me run operations, he went and chased another business opportunity in Toronto. I don't fault him for it, but we just went, kind of separate ways. And so I was focused on winding down. I got to a point where I was running, 25, 30 construction sites. Where I was literally running, and I had a guy who was my general manager running things, but he was bringing problems to me all day long. And guys would go around him sometimes and just bug me with the problems. And just investor communication, we didn't have someone to just relay all the information and updates and the right systems and structures to deal with going from a $4 million real estate portfolio to 20 million. That's a huge jump. And it was just I could have built systems and just kept going and grown, actually, to be honest. But I just sat down with my wife and sat down and had some goal setting. And we're like, this isn't what we want from life. I don't want to build a big business. There's a clear path here in 5 years to go from 20 million to 200 million in real estate holdings. And I know I can do it. I'm confident I can build the systems. I can bring on another business partner, bring on staff, and get it done. But does it fit my goals? And that's the question you have to ask yourself when you're investing in general, trying to build a plan. What are your goals for your life? And so one of our goals has been to enjoy the warm weather, be down in Costa Rica or in Florida for like 4 or 5 months a year. And so that's where I started investing in Florida, to build towards that plan. But it wasn't meeting my goals. And I was feeling hollow inside. I'd make like 50 grand on a property, we'd buy under market value, and I'd split it with the investor. And it got to a point where it gave me no happiness, or no, like, I guess the incremental happiness wasn't worth the stress associated with it. And I just felt like it felt like I was a business owner working full time. And I did this to be financially independent, to be retired early, to enjoy life. I have 2 young kids. I'm like, my daughter's 4, my other daughter's almost 1. I want to be spending time with those, like I want to enjoy those precious moments. And so for me, that was a big turning point. And we've been actively selling off a lot of the portfolio. We've been selling like millions of real estate off. I just recently sold a bunch more real estate off. So I'm currently focused on, so you guys know I invested, I guess I mentioned on your channel, I invested in a business. So I have 4 strategies, I guess, for building wealth right now. And the first is buying private businesses. The second is owning a real estate portfolio that has cash flow and appreciation upside. The third is investing in stocks, which would have like a basically dividend and a capital appreciation. And the fourth means of building wealth for me would be private lending. And so I'm in the process of starting up a private lending, I guess, business of sorts, where I'm going to park mostly my own money, but I have some other money that friends of mine that want me to like refer them to people who will borrow money. So I'm starting up a bit of a lending piece, and that's just super passive for me, just to literally lend some of my wealth out. I've cashed in some, and I'm like, geez, $1 million at 15% in private mortgages, that's 150 grand a year. That's that's a good piece of cash flow right there. And then I put another $1 million in stocks, and at like 8% growth. Right now, stocks are pretty beat up. So I've actually been dumping a ton into private banking. Believe it or not, I went and set up private banking. I'm going to share on the channel about private banking for those who don't know.
Okay.
You can do private banking if you have a net worth of over like 1.5 to 2 million, depending on where you're at. You give them more than $1 million in stocks, and they will lend you back. So you can basically say you had you put like $1 million or $2 million into a stock portfolio. They'll manage it for like 0.75% or 1% fee, but coming with that is the advantages of private banking. So for instance, when you're closing on a deal, you email your guy and he drops the draft off to your lawyer. You don't go to the bank anymore. All private banking, you don't go into a branch anymore. And with all that comes like a level of sophistication. You get an advisor that'll build you a stock portfolio that's pretty resilient. That's, ideally, they know more than we do, and they can build a portfolio. But the real part that actually gets me super stoked is you can go borrow 70% loan to value back on that portfolio. So you could go put, like, as an example, $2 million in a stock portfolio and borrow back 1.4, like prime plus 1 or prime plus 2, and then lend that 1.4 out at 15% on private mortgages and make the spread. And so when you could put money into the stock market and then pull it all back, so it's just like the bank's money in the stock market, that's really attractive. So that was one of my 4 pillars for, like, I guess, retiring earlier, building cash flow. I wanted resiliency from the standard of like diversification builds safety. And so I believe that real estate investing is always going to be a cornerstone. It's one of the 4. I guess private lending to businesses and real estate is, I guess, so 2 of the 4 are real estate related. But it makes sense, I think, to have diversity in your income streams as you build wealth. Once you've got to the FIRE point or whatever, you get to a certain level of wealth. I want to not lose what I have. That's the most important thing, and ensure that long-term my family has stable income. So that's why I've been selling off some properties, is to raise cash to buy private businesses. So if people want to sell businesses, I'm open to buying them in that sort of way, to build cash flow and to build long-term equity. I have people in place that can help run those businesses. And so that's a piece of the 4 pillars. The lending piece has been great. The stock piece is great because you can borrow it back and then bring it into the lending arms. There's a lot of synergies between it. Another key piece of having the stock portfolio is now I can go into the bank, and I know of a lender that does 50 property mortgages. So the bank says you can only give like 5 or 10, maybe go up to 10. There are lenders who will do up to 50. And one of the things that this lender likes to see is net worth outside of real estate. And so putting money into stock portfolio and then pulling it back out to invest in real estate again looks really attractive to them. They see that diversification. So it's part of actually building the real estate silo of the 4 legs, getting into the diversification of the stock portfolio. So for the Mike Rosehart journey, part of it is about enjoying life more, and I've been doing that a ton. And I'm really thankful for the opportunities I've had. And some people are still bringing the opportunities. I'm sorry I have to pass on them because I'm so frugal with my time now, as opposed to being frugal with my money.
Do you want to get control of your financial life? Do you want to crush it in real estate with wholesaling? Do you want to join my full-time team of wholesalers like Mike or Shahir? Or what about Tyler or Diego? Or what about Amar? All right, and what do we do, boys?
We make offers, we buy fast. Never gonna miss a deal cause we pay cash. Offers, 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 deals, deals, deals. Tell us, Mr. Seller, what price do you feel? Cause we're Southwestern's biggest source of deals. Boom!
So if you guys want to crush it with wholesaling, you need to join my team. And down below, video description, there's all the links you need.
I'm not, you guys know I was super frugal. I was like the most frugal guy there ever was. I'd be the guy who buy waters all around. And now, like, we had a full-time nanny before COVID. We had some issues with COVID. We had to lay her off. We'll probably bring her back when COVID's done. But it's one of those things where, like, I'm focused now on what will help me live the best life. And if, you know, it costs me $25,000 a year to have someone help cook the meals and clean our house and help with the kids, stuff, and I don't have to do more deals for it, to be honest. Like, I already have the cash flow to do it. Why not do that? And so for me, it's been a really hard shifting point, going from being super frugal to now being in a position where I have enough, like, I have passive income I have a lot of passive income already, right? It's from those four sources that I don't need to work anymore, ever. And so it's hard, I guess, to get into a real estate deal, or I have some real estate properties I'm trying to sell off, where the tenants are bugging me on like social media, and they find me, not my property manager, they go to me because I'm a public figure of some sorts, a little bit. And so they find me, and it's annoying. And so for me, like, some of my decisions to sell properties have been not financial, but like, I don't want this person in my life or connected to me in any way. And we've made money in this property, let's cash it out and move on, right? So that's what's been up in my world, focusing on those four categories or four pillars and trying to split my wealth out into a quarter. And that way I have like pretty resilient income streams. If one goes down, I still have three more going, and I can live happily off any one of the four. And so I'd be 4 times FIRE, I guess, is sort of the plan. But long-term, want to have, you know, greater impact. Once my kids go back to school, I'm probably going to wind up the blog again and get that going again. Probably do some, I really want to sit down for like a year and write a couple of books. It's one of my things on my list of things to do that I just never got around to because, you know, so busy with life and growing and, you know, kids and real estate and all that, that those are some things that are on the bucket list now. And so, yeah, I'm still taking out the odd deal here and there just to stay fresh because I enjoy it, but not with the same intensity. Like, I might take down 4 or 6 properties. Through the mentees, I might take down another 10 or so or 12, but I don't have the same growth goals that I did before in a year. And like, if I go through a year where I acquire no real estate, I'm quite okay with that.
So do you mind, just to recap there, or maybe give us a little bit of perspective, what's your current asset allocation? Do you know roughly? Can you give us a ballpark there?
My target, I guess, would be, so I'm working towards 25%, 25%, 25%, 25%. So I want a quarter of my net worth in each of these 4 categories, the 4 categories being private lending, real estate, owning rental properties, the cash flow, a stock portfolio with focus on dividends and capital appreciation, and owning private businesses. So buying like companies, you can imagine like a Subway franchise or a private business or something.
And so I guess before you made that decision, where were your assets at?
90% real estate.
And was the rest like paper and cash, or?
Yeah, like cash, and I had some stocks, like, you know, we're talking like 100 grand or something. Not a lot of money in stocks. Maybe to some, a lot of money, but compared to my net worth, it was a very small percentage.
Yeah, gotcha. All right. So beyond starting, like, kind of respecting your time more, which I agree with you, you should. So that's good to hear, Mike. And wanting to write a couple books in the near future, are there any other big 5-year plans other than trying to just rebalance your net worth and portfolio?
It's a good question. Jeez. I mean, a lot of the goals that we have in our goal book, I actually have it here.
Oh, cool, man. When you say is that you and Elise, or?
Yeah, me and my wife, Elise, yeah. For me, it's just more about enjoying life. I feel like one of the big audacious, you know, scary goals is like a mansion. I just have had that on the vision board for forever. I think in the next 10 years, I'll evolve into having a property like that, only because like financially it becomes frugal at a certain point. Like when I can live on 20% of my passive income or 30% and have a massive savings rate, it doesn't make sense not to have something like that and really enjoy life to the fullest. But that's my primary goal. If you look at like the goals, the second goal is growing. Like I still like to grow, and it feels good to grow and to have, you can have more impact and more change on the world through growth, right? It's one of your core principles as well. That, through growth and through the acquisition of income, you can shape the life that you want. It's great. I think that growing is good, but at the same time, I'm not going to put growth ahead of enjoyment of life, where I did before. For the last 9 years of my life, I put growth before all else, and I made a lot of sacrifices to get where I am today. Some sacrifices I can't get back, right? And so for me, it's about, again, spending some time in Florida. I'll probably buy some properties down there. You hear about that. I'll be buying some income-generating Airbnb stuff down there, some multifamily down there. And that's because I enjoy that. That's what I'm going to do for fun. At a level of work, like a level of, growth or a level of intensity that's much less than I used to do. So I might spend 20 hours a week doing that because I enjoy it. Focus on the high value, outsourcing everything that isn't enjoyable, like property management and construction. Focus just on acquiring the deal and putting the deal together and that sort of thing. So that's what's on the docket, is still growing, but just with a focus on enjoying life over everything else. And so part of that means we love to travel, and that's something we want to be doing more of. Part of it is, it's spending time with my kids and my wife and just enjoying life. Part of it's bringing back gaming again. I got a subscription to World of Warcraft. I bought it for a year to force myself to have to play. It's $120. So I bought it for that. Well, like if I spent the money, then I'm more likely to.
Yeah.
And then if I get addicted, I'll have to force myself to stop. But it just balance, living a life of balance and harmony. There was a blog post I did 2 years ago and a video I did about a year ago on the 8 aspects of like a happy human being. And one of those things is like getting fit. 7 months ago, I was in the best shape. I was renovating my house, my basement here, like in November, December. I was in great physical shape. I was fasting every day for 19 hours. And I only ate during like a 5 or 6 hour, sometimes 7 hour window. And I got like ripped. And now I've just, I would be scared to show myself on camera. I've gained like 10 pounds and I have like a little belly right now that's starting to come on. And like, that's not what I want, right? So I'm focused on like the health aspect. And as an example, focused on like spirituality is another big piece, and like finding, what I'm meant to be doing on this planet, and exploring, the deeper pieces in my mind about where I kind of, I don't know, just I get into like deep rabbit holes about things, and like I don't want to talk about that on a financial, show, but just finding that overall well-being, right? So that's what my big goals are, is just doing that. And I think naturally over time, growing at like a 15 or 20% growth rate, which has been like the worst year I've ever had, on average, I think that I'll probably just grow into being like a higher net worth top 0.1%er without having to put a lot of the effort in. So I kind of had to ask myself, like, is there a difference between being 40 years old and having, $20 million and having $100 million? And like, I don't know if there's a huge difference between having 20 million and 100. At 20 million net worth, your passive income is like well into the 6 figures every month. It's hard to, like, there isn't much you can't do with that amount of wealth and you can't enjoy, right? And so I don't know, I got to a point where like there isn't a need to grow in the same way that there was before. It's a different type of growth. It's growth for the fun of it. It's less about the need for, reaching FIRE or, whatever. Before there was actual need. I felt like my survival depended on being able to unlock FIRE, but now I don't have that same FIRE behind me pushing me. It's just like sort of self-motivation. But I think that it's a great place to be. I love the FIRE journey, has been amazing. And it's been interesting to watch from like a 10,000 mile view of myself shifting from lean FIRE to Lux FIRE.
Yeah.
And I don't know, I guess if you can afford those nicer things, there's nothing wrong with having that and enjoying that. And, outsourcing those things in your life, you can't. But you have to understand that if you're right now aiming towards a lean FIRE, that's okay too. The Lux FIRE is totally, I kind of got here out of my passion, built me a lot of wealth. And so now that I have all this wealth, I might as well spend some of it and enjoy life a little more. And so it's a weird mindset shift, telling myself that like, it's okay to outsource cleaning, or it's okay to outsource like cooking or things that I don't want to do. And that's been really hard because my fabric, like woven into my DNA, is the frugality. And so I still battle with that on the daily. But.
Awesome. Yeah, I really appreciate you sharing all that, Mike, and just being open and vulnerable with the audience. This was a great conversation. If people want to follow along with you on your journey, what's the best way to do so or get in contact?
My live weekly show that I've been doing for 2 years, every Wednesday, 7 p.m., the Mike Rosehart Show on YouTube, or just type my name into YouTube. That's the only thing I produce now is a weekly show, or Instagram. I do a lot of stories on Instagram, so you can follow along there at Mike Rosehart. Those are the 2 ways.
Awesome. We'll throw links in the video description down below, and thanks again, Mike.
Thanks for having me on.
Thanks again to Mike Rosehart for taking the time to shoot this video. If you're currently not following along with Mike on his journey, we're going to throw a link in the video description down below. Go and follow him on YouTube, on Instagram, and anywhere else he is in regards to social media. What else would you guys like to see myself and Mike Rosehart discuss? If you didn't know, we've been making videos now on my YouTube channel for almost 4 years. So I'd love to hear, would you like to see us return to talk more about financial independence, retiring early? Would you like to see us talk more about frugality and saving money? Or would you like to see us just double down and keep talking about real estate investing in 2020? I'd love to get your input, and the best way to do so is in that comment section down below. So leave us a comment, smash the like button, hit the subscribe button if you're new to my channel, and we'll see you in the next video.